What's up traders, Tom here with another video. Sometimes the stock market reaches a critical juncture where two levels become so important for the continuation of a trend or the start of a new trend. Are we at that point now? And will the Federal Reserve save the stock market once again? Stay tuned. So today we'll be talking about our thoughts on the stock market and the week ahead, what to watch out for, and what you need to start doing if you want to take advantage of these opportunities. We'll also be taking a look at the key technical analysis of the S&P 500 and Dow Jones. Remember to subscribe, hit that alert button, and smash the like button if you enjoy our videos. So let's start today by talking about the VIX, or the Volatility Index. Basically, this index is showing us the fear of the market. Generally, if the VIX is spiking, we are seeing aggressive moves to the downside in most of the key stock market indices. We've been talking about this a little bit over the last couple of weeks, but I wanted to point out this key 45 zone. Basically, a lot of the pros and big investors are looking at this level. And the reason they are is if the VIX is able to get past the 45 zone, that will signal further bearish momentum and a huge increase or spike in volatility going forward. Remember that at the same point as the market is probably getting up here in terms of volatility, we'll most likely be seeing it hit key support levels on the S&P 500, Dow, and NASDAQ. So it'll be a key point to watch in terms of investments and trading. Whenever you want to think about investing in the market, you want to think about the opportunities that arise, but also what you need to do in the stock market before moving ahead. So we're looking at the Shiller PE ratio here, and we've spoken about this, and it's going to be hard for us to exactly tell what is a good PE ratio right now and a bad PE ratio. Because of the Fed and the quantitative easing, it's most likely that current PE ratios will not go back to their mean and median over time. Some industries will, some industries won't. So it's a good sign that at least it's dropping and there's more value coming back into the stock market across most of the shares. Obviously, those 5 big tech shares, they're still pretty overpriced in terms of levels, but we might see returns again. And that brings me to the point where you need to be thinking about what you're in and how it's going to react if we do enter into some bearish sentiment. So here we have Nikola Corporation, and this stock has gone up massively since May. For anyone that's been buying this and getting in and getting into this trade, they've done amazingly well. And we can see here that the price was about $13 in May, and it went all the way up to around $92, $93. Now this to me is definitely a spec stock, as in people are speculating on the stock, on the valuation, and they're thinking about things that are going to happen in the future rather than necessarily thinking about the real fundamentals right now. This particular stock is one of those stocks where if you're in it, you want to be thinking about your next opportunity. And before we go any further ahead, I just wanted to let everyone know that it's important to understand that any information contained in this video is purely going to be for educational purposes. And obviously it doesn't take into account your specific needs or circumstances into consideration. You must look at your own personal situation and requirements before making any financial decisions. Another stock, similar lines, things like Tesla, it reacts heavily both ways to bullish sentiment and bearish sentiment. Tesla is a highly traded stock and a highly speculative stock from the perspective of people trying to take profit and take losses. If you look at YouTube videos, you look at Google Trends, you'll notice heaps of people talk about this stock, and there's a lot of volume that goes on. So it's important to know that when there's a lot of volume going on, there's going to be a lot of sellers and a lot of buyers. When you can pick the right levels for the stock, you make amazing money. But if you can't get out in time, it's going to be one of those things where you could see some real losses very quickly. We're at a key level of support here with the 20 EMA holding up this stock recently. That's the red line here. And we know that when it gets through this zone, it came back to the 50 EMA, this blue line, pretty quickly. The 50 EMA would also be a key level because we have previous resistance here at about 840 that could act as support and act as a lot of buying pressure with people in the market getting involved and wanting to buy this stock. But it's key to think about what stock you're in and how has it run recently, because stocks that have run very heavily, they're the ones that fall the most as well. So we have 7 key reasons in terms of things that are happening in the stock market and why they're happening. So let's go through those each right now. Obviously, we've got the rising infections, we've got the hospitalizations, we've got things like certain states having to close certain sectors, and that is certainly one of the lead drivers to the stock market concerns. We also have a key bit of information coming out this week, which is the US Labor Department's monthly jobs report due Thursday. It brings up another point as well. When we've seen results that haven't been that positive, remember the Federal Reserve has usually been coming out with statements saying it's okay, we've got the markets back, we're going to support everything, and that's okay. But with things like the stalled plans for further economic stimulus from Congress, we know the Federal Reserve has been trying to push Congress to do something to support the markets more than them having to do any more. It's a story to watch and something we should be looking at. We've also spoken on the channel about the quarter-end month rebalancing, where pension funds and mutual funds will take some profits off equities and they'll move those profits into bonds and other things of the sort. This will create fairly large billions of dollars of transfers. It will be one of the reasons, never the whole reason. We have Joe Biden's lead in the presidential polls, which are starting to worry certain stocks in the stock market as tax reforms may be rolled back. We have the market technicals hitting key levels, which we'll talk about in just a minute. And we also have low stock market volumes coming into a holiday shortened week. And I want to remind everybody that whenever we have low volumes coming into the stock market, generally they can be a little bit more manipulated and we can see wilder swings. We saw that in 2018 and 2019, specifically also when the trade war concerns were going on around Christmas. If you haven't already, make sure to get a calendar and make sure you're aware of the time that non-farm payrolls comes out and all of this information this week. It will be key. And we need to see what the Federal Reserve is also going to say. They might come out and say something in particular before then though. And that has been what they've done before. We mentioned the 4th of July weekend. We'll talk about this more in the future, but there's always been this key positive correlation going into a weekend and the stock market. In fact, most weeks going into long weekends have been positive, and people will talk about things like the Santa rally and other stuff. We'll be covering that on this channel, so make sure you subscribe and hit that bell to hear more about that in the future. What's happening this weekend? Well, we do have some bearish sentiment on Wall Street weekend futures. These aren't always accurate, but I do find that when they're negative, usually the stock market will open somewhere down instead of being up. This has been pretty consistent throughout this current crisis, with most of the time the Wall Street weekend charts being slightly wrong, but still showing the general sentiment on the market open. We'll start today's technical analysis talking about the Dow. So the Dow has hit 25,000. And that is the key psychological zone where we'd see support come in. In fact, we also have 2475 to 25,000 as being a bit of a range where the market will probably sit and find some form of support, as previous resistances will act as support or role reversal like they did over here. Now over here, we also had the Fed coming in and stimulating the market. But if it gets through this key zone here, expect a fairly large gap fill all the way down to 23,000 where there is key buying support. And this brings me to one of my main reasons for saying do this now in this video. You want to be able to set alerts and you want to know when these key levels are broken. You could be working, you could be on the phone, you could be doing anything else. And if you're not aware in this market, in these current conditions of something that's happening, you will miss opportunity. And unfortunately, opportunity can only be there sometimes for 20 to 30 minutes. In fact, during this crisis, I've seen some days where I've been there at the right time, the right place with my alerts, and it has ended up working out very well for me. So make sure you set alerts at key levels. Here, you'd be wanting to set an alert under the 2475, and obviously we'd also want to be setting alerts for the stocks that we're looking at potentially purchasing over the longer term. What about the dollar index? Well, the dollar index closed at that 97.50 that we've spoken about on this channel. Usually when you see risk off, you'll see strength in the dollar, strength in gold, and we certainly saw that in Friday. In fact, gold hit that perfect role reversal zone, and the dollar is about to try to break past that previous high here of 97.70. If it does so, expect the market to strongly move into something like the 98 zone, where we have the 200 daily simple moving average and previous support. So there does make sense that if the risk off kind of sentiment continues this week, we could see dollar strength coming in for sure. What about the S&P 500? Well, the S&P 500, as we've spoken about, it's all about the real market rather than the futures. You want to see where the real market closes rather than necessarily the futures. So similar to the Dow, we have resistance here at the 29.50, which is acting as support and will probably act as support again if the market gets through the key 3000 psychological zone. It's going to be an important level for you to set alerts at, and if it does get through that zone, expect the market to try to fill to 2800. I haven't seen too many people talking about this one, but I was looking at the monthly candle on the real index here, the US 500, and look at this. For anyone out there, they might be yelling at the screen, looks like a pin bar, or in fact, a shooting star. But if we saw a shooting star and we saw it close down at these levels, that is a very bearish signal. And remember, we are on a monthly time frame. So this is one to watch, one we'll cover a lot of. And if it does close bearish, especially if we then have something like another bearish candle afterwards, that's actually a big candlestick pattern that we'll talk about on this channel. So this one here is a theoretical in terms of where it's going to close, but it's one of those ones, again, we want to set alerts and be ready for anything because we are in a market that is highly unpredictable and very fast each way. Very key level about to happen only in a few days this week. So another thing that you want to do right now is you want to be ready for the opportunities. So if you've got the bearish sentiment and you believe the market, let's say, is going to 2800 and you'd be interested in picking up some stocks at that level, why don't you go and you stock screen the levels that you want them at, but also more importantly, the financials and the balance sheets. By using TradingView Stock Screener, we can take advantage of that and we can have a look at the stock market, have a look at the ratios, the debt to equity, the net debt, the quick ratios, assets, everything else, filter all of this information and then come up with a solution to some of the stocks that we're going to look at and then look at the technical analysis to get our prices. Remember, I'm a massive believer of getting the fundamentals and marrying them up with the technicals. It's one of the best strategies you can use, and many people focus on just one. Focus on both, and then you have more knowledge to make informed decisions with. Because at the end of the day, it's all statistics, and we want to take advantage of the market with as many statistics and as much probability as we can. So I'll leave this question to you today. Have you ever had a point where you've gotten too greedy on a stock and you've either gone, I want a certain level in terms of take profit, or I want a certain level of terms of entry, only to see either the profit fall away or for you to not get that stock and the stock to go up heavily? I'm sure you have, because everyone has, myself included. Think about that whenever you're investing. Think about things like dollar cost averaging and other strategies that can work well for you. If you've enjoyed this video, remember subscribe and hit that bell, and we'll see you in the next video. Good luck everybody this week. It's going to be an interesting one. Let's see what Jerome the printing press has in store for us next. Bye.